Welcome to our journey into the world of investing. Many people believe investing is complicated, but in reality, it can be straightforward and accessible to everyone. Today, we'll break down the basics and show you how easy it is to start. Whether you have a lot of money or just a little, investing is about making your money work for you. We'll guide you through simple steps, practical examples, and key concepts so you can feel confident about taking your first steps. Let's begin by understanding what investing really means and why it's important for your financial future. Investing simply means putting your money into assets that have the potential to grow over time. These assets could be stocks, bonds, real estate, or even your own business. The goal is to increase your wealth by earning returns, which can come in the form of interest, dividends, or capital gains. Unlike saving, which keeps your money safe but doesn't grow much, investing allows your money to multiply. By understanding the basic principles, you can make informed decisions and start building your financial future today. You might wonder why you should invest at all. The answer is simple: investing helps you grow your money faster than just saving. Inflation slowly reduces the value of your cash over time, but investing can help you stay ahead. It's also a way to achieve your financial goals, like buying a house, funding education, or preparing for retirement. By starting early, even with small amounts, you give your money more time to grow. The earlier you begin, the easier it is to reach your goals. There are many ways to invest, and you don't need to be an expert to get started. The most common types include stocks, bonds, mutual funds, and real estate. Stocks represent ownership in a company, while bonds are loans you give to governments or corporations. Mutual funds pool money from many investors to buy a mix of assets. Real estate involves buying property to rent or sell. Each type has its own risks and rewards, but all offer opportunities to grow your money. Stocks are one of the most popular investment options. When you buy a stock, you become a partial owner of a company. If the company does well, the value of your stock can increase and you may receive dividends. Stocks can be bought and sold easily, making them accessible to most investors. While stocks can be risky, they also offer high potential returns. Understanding how stocks work is a key step in making investing easy. Bonds are another common investment. When you buy a bond, you're lending money to a government or company. In return, they pay you interest over time. Bonds are generally less risky than stocks, but their returns are usually lower. They can be a good choice for people who want steady income and less risk. By mixing bonds with other investments, you can balance your portfolio and reduce overall risk. Mutual funds are a great way for beginners to invest. They pool money from many investors to buy a mix of stocks, bonds, or other assets. This gives you instant diversification, which helps reduce risk. Professional managers handle the investments, so you don't need to pick individual stocks or bonds yourself. Mutual funds are easy to buy and sell, making them a convenient option for anyone looking to start investing. Real estate investing involves buying property to rent out or sell for a profit. It can be a powerful way to build wealth, especially over the long term. Real estate offers steady income through rent and potential appreciation as property values rise. While it requires more money up front and some management, it's a tangible asset that many people find appealing. Real estate can complement other investments in your portfolio. Starting to invest is easier than you think. First, set clear financial goals. Decide what you want to achieve, whether it's saving for retirement, buying a house, or building wealth. Next, choose the right investment type for your goals and risk tolerance. Open an investment account, which can be done online in minutes. Begin with small amounts and gradually increase as you learn. Remember, consistency is key to success. Before you invest, it's important to set clear goals. Think about what you want to achieve and when. Goals could include buying a car, funding education, or preparing for retirement. Having specific targets helps you choose the right investments and stay motivated. Write down your goals and review them regularly to track your progress. This simple step makes investing more purposeful and effective. Understanding your risk tolerance is crucial. Some people are comfortable with high-risk, high-reward investments, while others prefer safer options. Assess your comfort level and financial situation before choosing investments. It's okay to start with lower-risk choices and gradually explore more options as you gain confidence. Knowing your risk tolerance helps you avoid stress and make better decisions. Opening an investment account is simple and can be done online. Choose a reputable broker or platform, fill out some basic information, and you're ready to go. Many platforms offer educational resources and tools to help you get started. You don't need a lot of money to begin. Some accounts can be opened with just a few dollars. This step is your gateway to the world of investing. You don't need a lot of money to start investing. Begin with small amounts and add more as you learn. Many platforms allow you to invest with just a few dollars. The key is to start early and be consistent. Over time, even small investments can grow significantly thanks to compounding. Don't wait for the perfect moment. Start now and let your money work for you. Consistent investing is more important than timing the market. By regularly adding to your investments, you build wealth steadily. Set up automatic contributions if possible so you don't forget. This habit helps you stay disciplined and avoid emotional decisions. Over time, consistency leads to greater success and financial security. Diversification means spreading your money across different investments. This reduces risk because if one investment performs poorly, others may do well. You can diversify by choosing a mix of stocks, bonds, mutual funds, and real estate. Diversification is a simple strategy that protects your portfolio and helps you achieve stable returns. Compound interest is a powerful force in investing. It means you earn interest not only on your original investment, but also on the interest that accumulates over time. This creates a snowball effect where your money grows faster the longer you invest. Even small amounts can become significant with time. Understanding compound interest helps you appreciate the value of starting early. Every investment carries some risk, but you can manage it by making smart choices. Diversify your portfolio, understand your risk tolerance, and avoid putting all your money into one investment. Stay informed and review your investments regularly. By managing risk, you protect your money and increase your chances of success. Investing works best when you think long-term. Markets can be unpredictable in the short run, but over time, investments tend to grow. Avoid chasing quick profits or reacting to market swings. Stay focused on your goals and give your investments time to grow. Patience is a key ingredient for success. Many beginners make mistakes like chasing hot stocks, investing without research, or panicking during market downturns. Learn from these errors by staying informed and sticking to your plan. Don't let emotions drive your decisions. Investing is easy when you follow simple rules and avoid common pitfalls. There are plenty of resources to help you learn about investing. Books, online courses, and financial websites offer valuable information. Many investment platforms provide educational tools and guides. Take advantage of these resources to build your knowledge and confidence. The more you learn, the easier investing becomes. If you're unsure, consider seeking advice from financial professionals. Advisors can help you set goals, choose investments, and manage risk. They offer personalized guidance based on your situation. While you can learn a lot on your own, expert advice can make investing even easier and more effective. Regularly reviewing your portfolio is important. Check your progress, make adjustments if needed, and stay aligned with your goals. Markets change, so it's good to revisit your investments and rebalance your portfolio. This habit keeps your investments on track and helps you stay confident. Automation makes investing even easier. Set up automatic contributions to your investment account so money is invested regularly without effort. Automation helps you stay consistent and avoid forgetting. Many platforms offer tools to automate your investments, making it simple to build wealth over time. Stay informed about the markets and your investments. Read news, follow trends, and keep learning. Being aware of changes helps you make better decisions and avoid surprises. Investing is easy when you stay up to date and adapt to new information. Emotions can affect your investment decisions. Fear and greed often lead to mistakes. Practice emotional discipline by sticking to your plan and avoiding impulsive actions. Investing is easy when you stay calm and focused, even during market ups and downs. Celebrate your progress as you invest. Track your achievements and enjoy the milestones you reach. Investing is a journey, and every step forward is worth recognizing. This positive mindset keeps you motivated and makes the process enjoyable. Life changes, and so should your investments. If you get a new job, have a family, or face unexpected events, review your goals and adjust your portfolio. Flexibility is important for long-term success. Investing is easy when you adapt to changes and stay focused on your goals. Investing is a powerful tool for building wealth over time. By starting early, staying consistent, and making smart choices, you can achieve financial freedom. Remember, it's not about getting rich quickly, but about growing your money steadily. Anyone can build wealth with patience and discipline. Let's recap the key points. Investing is easy and accessible to everyone. Start by setting goals, understanding your risk tolerance, and choosing the right investments. Stay consistent, diversify, and keep learning. Manage risk, automate your contributions, and review your portfolio regularly. With patience and discipline, you can achieve your financial goals and build wealth over time. Investing is truly easy when you take simple steps and stay committed. Don't let fear or confusion hold you back. Start today, even with small amounts, and watch your money grow. Remember, everyone can invest and benefit from it. Your financial journey begins with a single step. Make it today and enjoy the rewards for years to come.